York, I'm Bonnie Quinn. This is Bloomberg Markets. Time now for Futures in Focus. Oil is falling today, down the most in 3 weeks, in fact, trading now at $63.85 a barrel. Joining me from the CME is Larry Shover, CIO with Efficient Advisors. Larry, there are multiple factors to talk about today when it comes to the oil market. On the one hand, you have the IEA talking about lower demand, and on the other hand, you have U.S. stockpiles increasing. Clearly, one is winning over the other, but what will be the medium-term impact?
Well, I think the medium term is really the cure for high prices is always high prices. And you said it correctly. U.S. shale is ramping up and has been ramping up production. It just takes a while. And once that gets into the market, I think we'll see a ceiling in the WTI market, perhaps right where we are right now in the mid-60s. But IEA, we've been running over a 5-year average with regards to demand growth for the past 5 years. And most people are shaving forecasts, but demand growth is still a lot more solid than most people care to admit.
Right, the IEA talking about economic threats, and that's why demand forecasts might be lowered. Now, what does OPEC make of all of this? It's already cutting in order to sort of support price. Would it cut more if it needed to?
Well, they're talking about it. I mean, we've lost 1.3 million barrels a day from OPEC, excluding Venezuela, on a quarter-to-quarter basis. And they're talking about cutting another 300 to 400,000 barrels a day in Q2. I would say they'd have to be somewhat careful because on the other side, we're going to have U.S. shale starting to bring their oil in, so it might negate some of that. But that's what they're talking about.
So, Larry, what else is catching traders' attentions down there? We have the yen today pretty, weak, 111.47, down about 0.4% versus the US dollar, but the dollar index is holding up, it would seem.
Yeah, and as I mentioned last week and the week before, I am long the dollar. I'm scared to be long the dollar because on every kind of macro view, it makes no sense. However, just common sense dictates that it's still the highest yielding funding currency. What else are you going to be long in the G10 or the G7 against it? Europe hasn't found a floor yet. Manufacturing continues to slide, and our yields are higher. So I'm going to continue to be long the dollar until further notice.
Well, Larry, we'll check in with you again very shortly, and our thanks to you. That is Larry Shover, CIO with Efficient Advisors from the CME.